Fundamental cues as well, and let's welcome Mr. S.P. Tulsian back to Bazaar. Good morning, Mr. Tulsian. Always a pleasure having you with us. Well, first up, we just had a discussion with Coal India. Yesterday, the numbers were very confusing, but some clarity now after the management spoke to us. It looks like they are heading for better volumes and better realizations this year as well. What did you make of the numbers?
See, I agree that some clarity has emerged on the numbers, largely on two accounts. I think one of the stripping charges, and secondly on the salary and wages bill, which has really seen skyrocketed. But because of the clarifications having come in, but the problem with the Coal India is seen to be that they have not been able to meet the demand the targets which they've set for the production, and in fact that has not been seen translating. Even if I exclude these two things, I can say that the results are not looking disappointed for Q4, but I don't think that the things are looking very healthy in terms of the reflection into the performance on the production front. Because earlier they had the railway problem. Now even the management con call has said that the railway have been very cooperative and have extended all type of help to meet the targets of the sales. So unless until we really see the 2 quarters, I don't think that market will, because Coal India has all along been a neglected stock, largely because of the production not being seen met by the company. So that should be seen as more data point which need to be kept in mind for the next couple of quarters.
Okay, Ms. Tulsian, hi, good morning. I wanted your views on Bpcl. The numbers have been quite good this time. The reported gross refining margins came in at $6.50 a barrel. Do you get a sense that the stock could get back to its 2018 highs of around 538 or so?
It's difficult to take that call because I don't think that is likely, because if you really see I agree that Q4 numbers have been good. I don't think that there has been any kind of disappointment. Marketing margins have all been maintained. Even GRM at $6.51 has been maintained. But if you generally what we do, we take a call on an aggregate basis on the yearly basis also for these companies, or I would say that for all three OMCs when you consider for Q4 numbers. And if you really see the FY18 EPS, that has been at about 46 rupees against 44 of the FY17. So market also is taking that you have these kind of risk looming always large on these companies when they are not. I have always been said that marketing margin may not be much relevance for these three oil marketing companies, because they constitute a very small portion, maybe about 10 to 15% of their bottom line, but still the sentimental negative seem to have got created. So I won't be expecting the old levels to be seen revisiting. But one thing looks certain, that in the given circumstances, the way the companies have all been operating efficiently, have been able to keep their GRM intact and the bottom line on an aggregate basis, on a yearly basis also intact. The things are not looking bad now for all three OMCs from here on. And if the crude supports, if the crude plays a spoil sport again, if we see it moving to $80, then definitely that will be a cause of concern. But otherwise, I don't think that the things are looking negative for all three OMCs. But I am circumspect or apprehensive on seeing the old levels again for all three oil marketing companies.
Fair point, sir. And there's so much of political noise as well in an election year on this issue. Mr. Tulsian, I wanted to ask you about this gas news that came. IGL, Indraprastha Gas, increasing the price. I thought that's a pass-through. Nevertheless, we saw all the gas stocks jump. How should we understand this theme?
See, Lata, in fact, I would say that probably for IGL, the results have really seemed to be quite good when I compare with it MGL. First, I'm coming on the results, and I'll touch on the gas price having raised by these companies, because the volume growth is seen to be quite significant. MGL is operating in Maharashtra or Mumbai, and IGL is in the northern belt and Delhi NCR. So the volume growth is seen to be more in case of IGL. But coming on the increasing of the gas price, that is always seen as a positive, because even if I presume that the it is just a pass through. Firstly, always price increases the margins, or in fact I would say that keeps the margin intact. And if you have the volume growth, then obviously that's seen quite positive, that you have not compromised on margin and you are seeing a volume growth as well of 10%. So if they would not have gone for the price increase, then the margin would have taken a hit. So I think that the Q4 good numbers coupled with the volume growth is seen positive for IGL, but always the product prices, by whether it is by MGL or IGL, is always seen positive if it is raised.
Does this have any connection to Gujarat Gas now?
No, I don't think that this has anything to do with the Gujarat Gas.
No, I mean, it won't have any impact on that stock. That's all I wanted to know.
No, actually keeping the view on the gas price hike and the expected increase to be seen. Now, probably we are keeping a positive view on MGL going forward, because if you really see in British Gas, the joint promoter of Mahanagar Gas have sold their stake from 32.5%, reduced their stake from 32.5% to 24%. And since then, in fact, we have seen this stock having corrected. I would say that probably Q4 numbers were seen only flattish for MGL. Not bad, but the kind of expansion they've been increasing. Maybe they will get the Raigad area for the city gas distribution, and the additions of the gas consumers which are happening in the Mumbai suburbs is seen quite positive. So taking Q from product price and IGL numbers, we will be taking a positive view only on MGL and not any other gas stocks.
Sure.
Or maybe Petronet LNG for that matter, because they are the infrastructure stock importing LNG and regasifying and all sort of things. So that will be seen positive for Petronet also. And even Petronet for Q4 numbers were seen to be quite good.
Okay. Ms. Tulsian, before we talk about the other bigger stocks, in the smaller stocks, I wanted your thoughts on Eveready, because this is the first time I've seen such a big loss for the company. They've reported an EBITDA loss this quarter, a net loss of 16 odd crores. I mean, Eveready was a multi-bagger over the last many years. You think this is the time has come to be cautious on this one, or if it dips, would you use it as an opportunity to buy?
See, definitely looking to the Q4 numbers, things are seen to be quite bad. In fact, I would say that the numbers are howler. And in fact, one should not only see the net loss. In fact, if you see the operating numbers also, they are seen to be quite bad. And I agree that the things have always been seen positive on the stock. But let's allow the stock to get correct. Definitely the stock can, fall maybe by about 10% also. Though the mid-cap, small-cap stocks have seen having stabilized now to a great extent. But you need to, because the results are in fact quite bad, and allow the stock to settle, at least looking to these numbers, and until we really know the reasons, or maybe the guidance going forward, we cannot take a buy call, or we cannot initiate a buy call at the current level, or maybe on a fall till we see a erosion of about 10 to 12% on the stock price from the current level as well.
Okay. Mr. Tulsian, good morning. First of all, happy birthday to you.
Happy birthday to you, Mr. Tulsian. We didn't know that.
So, wish you a healthy life, Mr. Tulsian. Your thoughts on a couple of these stocks which have come out with earnings, BEL and also Kumar.
Anush, thank you for wishing a happy birthday, and I am grateful to all the team at CNBC. Coming specifically on BEL, I think the things are really looking bad, because Q4 you always keep high hopes on two stocks, BEL and BML, and if you really see the margins, they have really disappointed, because ultimately the comparison has to be, I may say that again on a yearly basis, the growth is seen missing. There is because I always correlate the Q4 numbers with FY18 also, but Q4 numbers of BEL always, stands out and, seem to be quite good. So that has seemed to be a big disappointment. Again, the reason for the fall is need to be analyzed and looked into. But even on FY18 basis, because in fact we have been keeping positive stance on the stock, and that has not seen coming in, or that has not seen reflected. Coming on Kumar, I think excellent numbers. If you really, again, I generally, for the APC, again, two EPC stocks, both have performed very well. One is Ashoka. In fact, I would say three stocks, which have the numbers which have come out yesterday. One is Dilip Buildcon, second is Ashoka Buildcon, and third is Kumar. But amongst three, if you really see, I think Kumar is a standout performance. Maybe comparison on a YOY basis may not be correct, because they had some issues in the last year when they declared their Q4 numbers in regard to the regulatory actions and all that. But if you take a call on the performance, that has really come out very well. PBT having increased to about 86 crore from 49 crore on a sequential basis, with top line also almost doubling from 462 crore to 912 crore. As I said, that the March quarter is always best for these EPC companies, but still going forward, the kind of work they have all been doing, Kumar in Mumbai, I think the stock should continue to do well, with EPS of 18 having posted by them for FY18. I won't be surprised to see the EPS are coming closer to about 22, 23. So overall satisfaction on all three EPC players, Dilip Buildcon, Ashoka Buildcon and Kumar, but Kumar stands out amongst all three.
Okay, so I have one more overall question for you. Over the last 48 hours, there were a lot of smaller companies also that announced numbers. You have a sharp eye for all of them. Anything that stood out for you?
Lata, if I take a call on last maybe 12 to 18 hours, because post the market closure, or I can, little extend it further, the good numbers which I've really seen is Sagar Cement, again having shown excellent numbers. Second is the Confidence Petroleum, again on a year-on-year basis. You may not like the numbers to have shown much growth, but if on a YOY basis, they have shown a 400% increase in their operating profits. Next could be CRM Silk Mill, again they have shown a very good numbers for Q4. Then next is a Federal Mughal Goets, and then last one is Gati. In fact, one can add the, I've already touched upon the this Ashoka Buildcon and Delhi Buildcon, but next could be Gati also, because their core business have really performed very well, except for that one exceptional. The things are not looking, the things are looking little dull. And the dull numbers or the bad numbers which we have seen are from Ashiana Housing, Asahi Songwon, Indian Card Clothing and MT Educare. I think these are the bad numbers which we have seen, and flattish kind of numbers you can say we have seen from Wimplast and